Do you use Cash App or Venmo? If you do, you could be subject to a major increase in your tax bill in 2024. You see, the IRS recently changed their requirements for using these payment processors, and if used incorrectly, not only can it lead to a major increase in your tax bill, it also can lead to potential legal trouble. So during today's episode, we're gonna talk about all the changes and exactly what you need to know to avoid this. We'll talk about the good, the bad, the ugly, all in today's episode. What's up, family? Welcome back to another episode of Tax-Free Living, where I teach entrepreneurs just like you how to live tax-free. So if you love the content on this channel, if you're loving the information that you're getting, please don't forget, hit that subscribe button and turn on the notifications so you can know when the next video goes live. So today we got one of them topics, y'all. I know you've been hearing the rumblings about this new Cash App, Venmo tax change that's gonna cause a lot of Americans headaches, especially business owners in America. So today I'm gonna talk about the new law change, how it's gonna affect you, and then ultimately the solution on how to put yourself in the best position to win. What is this new law change? So in 2024, the IRS is now requiring payment app companies like Cash App and Venmo to send out a 1099-K for all users who receive more than $5,000 on their platform. This means you have to report this $5,000 or more as income on your tax return and therefore pay taxes on this money. And what's even worse is that in 2025, that number drops to $600. So if you receive more than $600 on Cash App and Venmo in 2025, you have to report that income on your taxes because you'll receive a 1099-K for that. In case you don't know what a 1099-K is, let me briefly explain. The 1099-K is a tax document that reports income that you've earned to the IRS. So if you receive more than $5,000 on Cash App or Venmo, they're now forced to send you a 1099-K to let you know how much money you received using their platform, and you have to pay taxes on it. And not only that, they're not just gonna tell you, they're also gonna tell the IRS. They're gonna send the IRS a copy of that same 1099-K saying that James over there received more than $5,000 using our platform. So if he doesn't report that, you know about it and you can audit him for not reporting that. It's kind of like somebody snitching to the IRS on you about how much money that you're making, right? So that's the big problem here, because before this new ruling, apps like Cash App and Venmo weren't required to send 1099-Ks no matter how much money you made. So you could have made $100,000 and you wouldn't have to report any of the income. Only apps like PayPal, Square, Stripe, only these major payment processors would actually send 1099-Ks, and even they would only send a 1099-K once you earned over $20,000. So how is this gonna affect business owners everywhere? Well, first of all, new starting out business owners, from my experience, they don't have their stuff together. They don't have their reporting together. They don't have their expenses together. They don't have their finances together. And what's gonna happen is they're probably gonna misreport the amount of money that they received from these apps. But guess what? The IRS is gonna know exactly how much money you made, right? So I think it's gonna cause an increase in audit to starting out business owners. And I think it's gonna scare a lot of starting out business owners. And I think it's gonna cause a decrease in people wanting to start businesses, which is not good, because if you wanna pay less taxes, you have to be on the right team. You have to be a business owner or investor, period. So I don't want this to discourage business owners everywhere. So I'm gonna give you all the solutions in a second on what I think you need to do about it. But before that, let me give you the other problems that's gonna come up. Because some people reach out to me like, Carter, well, this is not a big deal. You're supposed to be reporting all your income anyway. So how is this any different than what they should have been doing before? My answer to that is, number one, I agree with you. We are required, as responsible citizens of America, we are required to report all income that we receive from our business activities. Here's the problem though. What happens when you use Cash App and Venmo for your business, but then what happens when you go to dinner with friends and family? It's a personal dinner. You pay the check, you pay the bill, and they all reimburse you for the money that you paid. Is that income? No, it's reimbursed money from an expense you paid for. But guess what? According to the IRS, that's gonna be income, right? And what happens when you buy concert tickets for your friends and they reimburse you via Venmo? That's not income. That is reimbursed expenses because you paid for a personal activity and they reimbursed you for it. But guess what? That's gonna get lumped into the other income that you made for your business. So you might have only made $5,000 in actual business income, but you might now be reporting $15,000, $20,000 of income using these apps, but that other money wasn't income. It was simply reimbursed expenses from your friends and from your family. So this is the major fear that I have for Americans everywhere, because they're gonna have to unjustifiably pay taxes on money that they never actually received. So this is gonna be a problem for people everywhere. The other problem that most people don't understand, and this is getting in the weeds a bit, but I think it's important that you understand this. Let's say you receive $10,000 using Venmo for your business, right? And let's say you have an LLC. Let's say you report that $10,000 on your Schedule C on your tax return under your LLC. Let's say you report that money in your LLC. But guess what? Your Venmo account is in your personal name. And your Venmo account has your social security number on there. So when you file taxes, although you showed that money in your business, the IRS is gonna say, hey, this social security number has $10,000 of income from Venmo. I'm looking at the tax return, I don't see it. So then they're gonna audit you, and they're gonna unjustifiably audit you because you showed the income in your LLC, but it was attached to your personal name, and you need to show it in your personal name, not in the EIN that's attached to your LLC. You see what I'm saying? So this is gonna just cause unnecessary audits for no reason, and I know this is scaring a lot of people. So what are the solutions? Number one, avoid using Cash App and Venmo for your business, period. I think that using Cash App and Venmo for your business, I personally think it's childish and ghetto, okay? And you deserve better. So we need to stop using Cash App and Venmo for our businesses and start using actual payment processors like Stripe, like Square, QuickBooks, all these other payment processors that are actually for business use. The second solution, which is really interesting, did you know that Zelle is one of the few payment processors left that have no reporting requirement to the IRS? Let me say that again. Zelle is one of the few payment processors that have no reporting requirement to the IRS. So you can receive $10, $20, $50, $100, $200,000 via Zelle, and Zelle is not required to send you a 1099, nor are they required to send the IRS a 1099. So you will be able to receive money in your business and report it. Obviously, you want to report the income, but we don't want to have unnecessary 1099s. So by leveraging Zelle, if you can't do Stripe, if you can't do Square, if you can't do QuickBooks, my last recommendation would be use Zelle, because Zelle, they're not required to send 1099Ks, so you can receive that money without the headaches of having extra 1099s, okay? Because that's what we're talking about. And don't hear what I'm not saying. We all should be reporting the income that we receive, but we want to minimize as many 1099s as we possibly can to minimize unnecessary audits as much as we possibly can. So these are the solutions we're giving our clients, and this is the solution I want to give to you. So if you like this episode, please, for me and for you, send it to somebody that needs to hear this. There's millions of Americans using these apps, and they're using it improperly, and we don't want increased tax bills. We don't want unnecessary legal trouble if it can be avoided. So be a blessing to somebody, like this video, share it with somebody else so we can continue to save more in 2024. All right, guys, see y'all on next episode. Peace.